Hey, it's the FinTech Newscast. My name's John, and with me, as always, we're lucky to have Steve. Welcome.
How's it going, John? Spending that sweet
Is that
money?
you applauding yourself?
No, no, no. That's me just throwing money away, making it rain.
Uh, yeah, yeah. All right, and we are very lucky to have this week a special guest, Dave Gilbert, the CEO and founder of FairSquare. Welcome to the podcast.
Thanks, John. Nice to be on. Steve, I like that money show.
He's there's never anything actually in his hands when he does that, but
No, not at all.
someday, someday, Steve. All right, our news story for the week. I've been seeing a lot in the news about prediction markets and how they're kind of working their way into the financial system. JP Morgan and Goldman Sachs specifically have been talking to Kalshi and Polymarket and how do they can coordinate, and maybe they and other fintechs are going to get ready to jump into this what has been a very profitable market at the expense of the people jumping in there. What do you think, Steve? Are Kalshi and Polymarket real fintechs, or is that more like a Las Vegas casino?
Oh, I think it's definitely on the Vegas side. I think that even with the with oversight from the SEC or the Commodities Trading Commission,
If
I think
only.
these are not. If only, right? If only. I think these are not fintechs by any stretch of the imagination. I think that it's a hot market. And speaking of that, I actually saw earlier how, speaking of a company that was chasing after the latest trend, Meta
Yeah.
recently announced that they're building something called Project Arena, which is basically their way to build a separate app to enter the prediction market space. So once Meta goes into an industry, you can pretty safely assume that it's
Huh.
pretty saturated.
You could probably use your Meta glasses to get into the metaverse and start betting on things in their platform.
Yeah,
And then you share and have people share and like your you can crowdsource
you can
your
crowdsource your
Well,
bets.
I do
predictions,
think on the
and
fi-
yeah,
I do think on the fintech side, I mean, there is a lot of people that are addicted to prediction markets, right? It's a person's dream to predict and
Gambling. Yes.
to gamble or to make a position, which allows that's in the same with the stock market to some level with puts and calls.
Yep,
And it's
yep.
just kind of going big where you have big institutions involved. So while it's gambling, you could say Vegas was gambling, the regulation came in and then kind of legalized it and put better infrastructure. And so it is kind of interesting times where fintechs are getting involved in distribution of unique stuff, right? Just to
yeah,
help the flow of money or information. Who better to do that than people that are tech driven fintechs? So it
well,
is a weird
it's
period. Meta's getting in it. I mean, that's what people they love it. So
they love it, but it's also, to your point that you mentioned earlier about Vegas. Unlike Vegas, this is gambling that you can do in your underwear from your bed 24/7, right?
This is not a
And
picture I
also,
want painted when you're saying it,
oh,
Steve.
well, this isn't me. This is the hypothetical guy. And it's also something that, it's built to garner your attention, to keep you hooked on there as well. And it's something that you do socially. So I think it's actually much more pernicious than the gambling that we saw in Vegas. It's also interesting because there's all these studies that demonstrate how the legalization of gambling can actually have significant bad outcomes for people. For example, I know that there's a study in Pennsylvania where they tracked bankruptcies and rates of suicide, and basically every negative outcome you could have essentially increased after gambling was legalized. Now you add to that, the pull of social media, look at what I gambled, etc., and also the fact that you can gamble on everything now, right? Famously from Iranian missile strikes to what words the president will say, etc. I don't think it's a good look, and it's disheartening to see that
their history of
these companies are getting
gaming,
into
I
it.
think, is kind
Yeah.
of biblical, right? In terms of betting, right? And so uh, how do you flow with the people that want to consume something, and then is that a problem? So, like, you look at the history in the U.S., you have a lot of Indian reservations, you have You have a lot of local casinos that you're kind of questioning, why are they in these specific communities, and are they preying on the elderly? The prediction markets are being it's more of a broader spectrum of people, so there is probably different mental risk, health risk in terms of
Yeah.
ability to access, ability to create markets, ability to do stuff, and that's where I think it's just the next form of gaming, but it's hitting the youth a little bit more than the traditional going to Vegas or the riverboat casino in a small town. So uh, I don't
So
think it will
are
go
you
away.
saying that J.P. Morgan and Goldman Sachs aren't going to take the moral stand that they uphold our high principles that they always have?
I think that why don't I guess it just depends on the people's definition of gaming, because I don't know historically. I don't know. These big banks might have financed all of Vegas.
Yeah, yeah. Well,
Is that
Robinhood has kind of been making stock market trading and uh, even more risky derivatives a very, very useful tool for hedging. But yeah, you can use it without any underlying risk that you want to hedge. But yeah, so yeah, Robinhood's kind of gone down that same track. It seems like maybe you're right. It is along that same track we've been going towards for a long time with the financialization of everything.
Hmm.
sort of fantasy football kind of helped, I would say,
Yeah,
create
yeah,
the community of free gaming, right? Just like arcades and gaming to now you could bring that to mainstream. So there's a path that when you look historical that probably led to this period. And then, yeah, how do you manage it and all that was different.
yeah, yeah. Yeah, so we do see the big banks jumping into this, at least dipping their toe in. They still have some regulatory restrictions, so we don't expect them to come out with their own products, but maybe running the back end for these fast growing companies. And of course, since Kalshi and Polymarket are so successful, we're definitely going to see more and more people jumping in. Hopefully, not just Mark Zuckerberg, another bastion of our moral high ground here. Yeah. So, yeah, kind of interesting. But yeah, I thought that was a new development in the fintech world. The way they're classifying these, by the way, are like binary options. So you have options on, a stock price, on volatility, which are essentially bets. So you can bet a stock can go up, down. You can
I think
do
over
a
time
strategy.
you'll
Yeah.
always have the protection boards come in to help uh organize like mortgage and auto and any industry. So I completely understand where you're from, and do want them to rein it in, obviously, but I do think that will all come through. It just their job, they got to protect consumers, and at this point, the disclosures and the spreads and knowing like you kind of know some the real risk and some gaming, like what the odds are, but transparency is a big one, and um, I just do believe they'll figure it out. I just don't know from a moral and all that. That's a different discussion in terms of is that
Yeah,
good
yeah,
for
yeah.
society and like you know
Well,
is
our
there's a lot
lawmakers
of
are
things. Are they good for
famous.
society? Yeah.
Our Congress and our lawmakers are famous for being long-sighted visionaries that look ahead for the best interests of the people and what kind of society that they want to build. So yeah, I'm also very uh, optimistic on that as well. But we'll see.
Yeah.
Maybe we'll have a prediction market fintech on soon. We can jump in there because there are more and more coming in. So yeah, kind of an interesting development. Not anything to do with FairSquare, though.
Nope.
I want to make clear. FairSquare, uh, which you're the CEO and you founded, is a holding company around SMB lending. Can you give us the brief history of FairSquare and how it came to manage so many subsidiaries?
So it started with 27 years ago, started the company in 1999 called National Funding, and with a $10,000 loan from my uncle, and kind of built the American dream of helping to finance and support customers with growth capital to hit their dreams. And so over time, a company that was started in Chatsworth, California, in a very small, I think it was 120 square feet, became a very successful company. And then we had '08 crisis, which
From
had a big
closet to
setback.
corporation.
Yeah. And then we
Uh,
had the '08 crisis, which people recall. And then over time, we've just been accumulating broad depths of industry knowledge only around small business. So I don't have consumer background. We've been financing customers between like 200,000 in revenue to 25 million is kind of our sweet spot. And we've been doing that for a long time. And it's kind of fascinating because you guys interview a bunch of people and like you get to hear people's stories in all different industries, backgrounds, walks of life, and you get to see a lot of success and sometimes you see failure. But it's kind of all I've been doing. Created FairSquare a couple of years ago to oversee a few of the brands. So we have smallbusinessloans.com. We have Finova Capital, we have National Funding, and a few other brands that we're developing was really as a holding company to help small businesses in a variety of verticals grow. And we were able to recruit some top talent to take my vision, continue to move it northbound. And this AI world is probably the bigger topic in terms of like, how's AI going to help or slow down small business?
I
And
haven't heard about it. What is this AI thing you're how does that affect you?
well, because I'm saying I have kids in college, right? So you have kids in college, and you're hearing all the AI boos, at the commencement speeches, and
Yeah.
um,
Yeah, yeah. Sometimes
we
you're
have
on
a
the
lot of
podcast.
public companies that have really bright people here. I'm in San Diego, where they got laid off, right? And so you're like, okay, there's a lot of bright people that never could start a business because they were employees, right? And
Right.
now with AI, I think it's since COVID, there's been 50% growth in business formations. Anytime there's disruptions, there's more entrepreneurs that come out of it. You're going to have a lot
Mm.
more than ever, and they'll just be smaller. And there'll be a lot of entrepreneurs that can become entrepreneurs that, whether they're brilliant or they're not as brilliant, these tools will give them the opportunity, if they have drive, that they couldn't do before. So, um, it's interesting because there's a lot of fear, but fear kind of drives opportunity traditionally. And so I think you'll see that people that really relied on so many resources and fear of starting a business can actually start one, like you said, out of your home.
Yeah, yeah, absolutely. Uh, you do thousands of small and medium-sized business loans. Just curious on the top level, are you seeing any trends in the past, I don't know, year, 2 years, like in different sectors doing better or worse? Like, do you get like a bit of a preview on how the economy is doing?
Yeah, you get usually in our industry, you get first looks of how people are feeling. And so there's
Hmm.
been a lot of pressure in the last couple years surrounding tariffs and then the instability and just confidence, right? And so uh, traditionally big companies, they work on their margins. You're seeing record earnings in public companies. And then small business owners traditionally have the harder time pushing their pricing upwards. So we've seen them maneuver through their entrepreneurism to figure it out, right? Whether it was adjusting their models, uh, using different tools, but it hasn't been, it's been more pressure fundamentally because their margins have gotten compressed, right? And so
Mm.
it's our job to help support them in different phases of transition. Because if you've been in business and their average customer has been around 10 years, you've been in business that long, not every year is fruitful. You're going to have good years and bad years. And so when you're in those different periods in your life cycle of business, how do we help support you? Um, there's huge movement in the construction related industries because of all the data centers. So you're going to see a lot of businesses that are booming in certain industries like plumbing, transportation, roofing, all the stuff that's needed just for trades to support all this growth. And then a lot of it's usually regional, right? How does it impact you directly? So if your city's a border city, how does that impact you if you're in a big city? So right now there's a lot of volatility state by state and city by city.
Hmm.
But at the end of the day, the business owner wants to know that they're taken care of and that they have support. I think restaurants have gotten hit the hardest, from, wages and food expense, that it's been the hardest for them out of all industries, to staff, maintain, anything that's related to uh, uh, food and beverage, right? Because
A
landlords
little
have
bit
raised the
tougher, huh?
rates and food costs have soared and wages have soared. So, of our whole portfolio, see, that's the toughest one. In order of, if you're willing to start up a restaurant now and, growth aspirations, it's just state by state, how is that world looking as inflation's kind of came through the country?
Yeah, that's funny you say that. There was just a large restaurant chain. I don't know if you saw this, Steve, closing in the Bay Area and there in San Jose and Larkspur, the
Very annoying. We have a gift card to Left Bank that we never use. It's been
Left
on
Bank.
my fridge for
That's
about
the
a year
one.
and a half. Yeah, yeah, yeah. And
Well,
I think that they
you
were
can
just a
collect
victim
that
of, I should say.
in bankruptcy proceedings. You can cash in on that.
Can I? I have no
So
idea. I mean, it's only
I
like
don't know.
I think it's like $100, but I think it's as Dave mentioned, a combination of rising costs for for food, for and for labor, and just tighter competition as well. So it seems
Oh,
like the
it's always been the toughest business, and
it's been,
yeah,
yeah,
yeah.
it's razor thin margins. Yeah.
You already put a little bit more on that, and yeah, we can see that. And I just want to get back. You're based in San Diego. You're our first fintech that's based in San Diego. How is the market there for? I guess
I mean,
the
I wouldn't say we're
technology.
base. We also have we have an Atlanta office. I would say is
Okay.
more of like where the fintech center component is. I'm based out of San Diego. We have an
Ah,
Orlando office and an Irvine office, and a small presence in New York. So
Hmm.
yeah, I wouldn't say fintech in San Diego is big. We do have Intuit and some Qualcomm and some bright companies out here, but this isn't a fintech hub. Um, you know,
so how do you find talent, and how is that these days?
I think talent, to be honest, is probably the best in a long time to acquire, because I think people are making a lot of life choices right now. If, well, do I want to continue working at a certain company? Is there a new company that's growing? And those are big time decisions when you're recruiting 10 to 20-year career people. Well, why should they come work for you? And we have a proven 27-year history, not PE backed. And so there's this whole different story that might not have been as popular pre-COVID when everyone was worried about options and stocks. And then I
Stability is
think
looking pretty good right now, huh?
Yeah.
well, I just think that people have maneuvered their own views of employment post COVID, to remote, to this, to that, to um, gaining ground of. There's a lot of insecurity at certain companies, right? Some companies have done such major layoffs that, um, now are they laying off brilliant people? The answer is yes. And then are they fearing other ones? Yes. And then we're a small company. We have close to 300 employees, right? So for me, that's opportunity to go recruit some of the brightest people, whether they were just recently let go or there's someone bright that wants to come over and have better opportunity. it's all the perception within a lot of these companies of your value in today's world, especially if it's on the public company side.
I'm curious. You mentioned that your
A
size
lot.
is about 400 folks or so, and we see a lot of competition in this space, right? And it seems like a lot of new fintechs are providing working capital solutions. So, how do you maintain that edge in terms of being able to get customers and provide a competitive market in both the face of again competition on one side and then rising interest rates on the other? Because I assume that your cost of money has also gone up as well. So, how do you tackle this very competitive space?
So I would say that it is a competitive space. One, the cost of rates and money going up has more of an impact on confidence for the customer than it does like their need. I would say so. The competition's still there. We differentiate ourselves through um, not just product differentiator, but also primarily through marketing channels, and then what type of customer we're serving. A lot of people started to kind of get so niche as they were post COVID that they really want to focus on certain verticals, and then they kind of abandoned like the traditional small business customer because it was easier to scale bigger companies and finance bigger companies. And you've seen that in the banks, right? Where the banks started saying, I only want to loan bigger companies. I don't want to really lend to the small. It kind of went into that same world in the alternative space for a while. And so we spent a tremendous amount of money both online and in direct mail and other channels to originate. A lot of peers, their competition is really through third party channels or affiliates, and so there's different sourcing situations that will kind of also just in all companies when the market shifts, what's your competitive advantage, and self-originating and balance sheeting and financing our own paper wasn't considered popular at some point. It was more offloading the risk, and so I think we've done an unreal job of balancing risk and balance sheet and fintech of lack of risk on some of that to mirror the economics needed to compete.
Interesting. So you mentioned something that I think that I learned actually as part of an interview maybe about a year ago or so. I really underestimated the amount of business that a fintech can get by direct mail. It seems like for me that seemed like it wouldn't be a profitable channel, but it's actually quite significant. And I'm curious, can you give me some sort of sketch as to how either what percentage or how you're using direct mail to get customers? Is it
So
like how
it's
effective is this?
I
You
think
should see
most
my
people,
mailbox, Steve.
it's not as full as you think, correct, John? I think there's
It's
a,
pretty full. I have
so
a small
John has a
business
full box.
and some other stuff, so I get everybody sending me stuff. But I get a lot of mail.
Interesting.
So we've seen it depends on too where you're getting your mail, at home or at work. So a lot of people have moved to email or texting and kind of were abandoning mail as mail costs have gone up. Data has been better than ever from a targeting perspective as all the data providers keep getting better and the AI tools. So while your cost to market has increased, the ability to find the right people has also gotten better big time, in terms of your
Mhm.
targeting. Um, some people prefer to go online and then there are people that prefer mail, but the targeting on both sides can be optimized. We spend over 30 million a year in direct mail. So it's a big part of our budget.
Wow.
Um, and so we're a big marketer. Um, and that really helps you, especially in pivotal times. And right now, then you have a lot of people sourcing off Chat GPT and other channels, so you can't just stay in one. We got to be all over the place. And I find that part fascinating. The quick pivot. I think Amazon said they did some amazing massive deal yesterday, with Chat GPT, because people are sourcing their information uh differently. And so That's our job, right? How do you find the customer? And and that's what we do. Yesterday or 2 days ago, my wife fixed something at home, had a vendor. She used ChatGPT. The vendor's like, "How did you find me?" She said ChatGPT, and
Yeah.
the person was amazed,
I think
right?
it's becoming increasingly more common. I've heard, I forget the name, but it's sort of like SEO for chatbots now. But I'll give you one example. I recently, my daughter broke the sink in our bathroom, and I was like, man, I got to get a new sink now. And you look at the configurations, etc., the size of the sink and all that, and just when I went on Gemini and just found, this is my dimensions. I took a photo of the vanity as well, and it just told me, by this is given what you need and what you want, this is what you should get, and it gave me a straight link to a vendor that I then purchased. So I think that using chatbots to kind of address the very niche and to you problem, I think is the future. So I can see how partnering with companies like ChatGPT, Gemini, or Claude, etc., could be the new sales funnel for providers.
You can't ignore the marketing of that. And then, you got to meet the customer where they're looking and invest in that. So the need
Yeah,
hasn't changed. Customer savviness is changing, which is good because you want them to be able to be more educated in their choices. And it kind of
yeah,
separates authentic companies from non-authentic. I don't think it stops though, because there's just different adoption rates
yeah,
of that.
yeah, yeah. Yeah, it's a brave new world. I'm curious. Actually, this question for you, John. Are you using any sort of LLM channels for your business, or not yet?
Uh, no, no, but we have had, like Dave, we have had people say that they found us through ChatGPT
Wow.
without any, you know, marketing. And we do get emails. That's the other thing. I do get a lot
And
of
so
emails. Yeah,
communications change how you want to be both of you communicated to.
Exactly.
Um,
not at
and
all.
you might say not at all, but you might not want to take a call unless if you're ready to take that call.
Yeah, yeah, that's true. That's true.
You might
When it's those
prefer a
short times when you're in the
text,
market, right?
yeah, that says, "Hey, here's the information for when you're ready." Um, I had a hotel experience where I was frustrated, and immediately they texted me the front desk number.
Oh wow.
And so, how you're being treated and communicated, a lot of people, um, from a sell and talk about a loan, they want usually verbal, unless if they're very
Mm,
small and they want process driven. Just like mortgage, you want to talk about your mortgage. It's one of the biggest decisions of your life. A small business loan is a big decision, especially the fact that it's unsecured. Buying a building is kind of a no brainer if you're like, hey, I own the pizza shop and I want to own my own building. But taking a loan that's unsecured for your growth opportunity is nerve wracking for a lot of people.
So
But the
just
communication is like your email. How many? It's very hard with all the promotions and stuff. Is email as effective as it used to be? Um,
depends if on the person, I guess. But I'll make sure to call in to Finova and mention I was just on with Dave Gilbert, so let's get this done. So the phone does sound like a good idea, actually. You have to be careful because they can stimulate your voice and have. Oh, he's right here.
yeah.
yeah,
Yeah,
it is very
any
fascinating. Of
any
the
interesting cybersecurity, by the way?
That's always a big concern. What people say, what keeps me up all night was always data concerns,
Yeah,
privacy concerns, and so we've spent a lot of money, you know, on those groups to protect. But I think that will always be a concern, right? As um, I always tell people, if you're a lender, or your insurance company, or a bank, there's bad actors out there that they're trying to figure out your loose end
I
and
see
take
you're looking right
advantage of
at
that.
Steve when you say that. Yeah. Can you
Bad
can you
actor right
just
here.
say can you just say real quickly? I approved that loan for John. Just very clearly enunciated,
You
please.
know,
Yeah.
there is a gratification that sounds kind of weird when you close a loan for somebody. Like sometimes it's not the funnest process when you borrow, right? Like a
Yeah.
car
Yeah.
loan or home, but like
Stressful.
when they drive off the lot on a car, you kind of go at peace, right?
Yeah.
And in business loans, the customers go through a lot of emotional volatility of how much they really need to borrow, what they really need it for, and can they make it with borrowing less, right? Because
Mhm.
so yeah, controlling the entrepreneur's mentality and journey through that's it's been evolving, you know, over this 27-year period. Yeah, people prefer to go on so have you been in a Waymo or an Uber or
I have,
both?
yeah,
Yeah.
yeah, yeah.
Yeah. Yeah.
Which one do you prefer?
Waymo, 100%.
Waymo. Yeah.
Okay, so you wouldn't seem like that person, right? In terms of, do I trust nobody in the car?
Well,
Right.
I think it's a
But
different experience because for me, it's the car. It's a nice Jaguar. There's no talking. There's no tipping. It's just kind of a cool experience. My preferences may change as it becomes more widely available, but definitely when I'm in the city and SF, Waymo all the way. It's pretty fun.
Yeah. We can. Me and my wife can continue to fight in Waymo.
Yeah,
Whereas
everyone
with the
prefers,
keep quiet in the Uber.
so they prefer Waymo, but then you have like in San Diego, there's regulators that, are they protecting the Uber drivers and their income at the expense and convenience of the customer who prefers, and it may be actually safer to be in a Waymo than an Uber,
yeah,
with a driver. I don't know the stats on that, but you could tell
it's
the
much
customer
safer.
experience is 100% what you expected. That's why it's so
Yeah,
popular. Right. And so I do find it fascinating the different generations of communication to what they used to perceive black car service with a driver. They would prefer nobody in the car and put their music on.
yeah,
And they did that change the first time they got in that Waymo.
yeah.
Uh, so that experience is kind of what I'm all about how do we transform this business as people are going to always need to borrow money in small business. How do we find them, serve them, and work with them? Because it is a very big changing time. I never would
So
have predicted Waymo 5, 10 years ago, or
yeah.
that it could be
Yeah.
adopted so quickly, you know.
I think a lot of people predicted it for 30 years ago, but took a
It-
little while. But
that
but
is my
what
thesis, is like the .com took just 27 years, right, to
late?
fully
Yeah.
manifest. But then I don't know 25 years from now
Exactly.
what that looks like.
Well, I'm too young to remember that, but Uh, so what are the market opportunities or next business steps that you're excited about right now? You mentioned AI and the world changing. What gets you
We're
up and
working on
going like
on a
these
lot of
days?
digital experiences right now, and like while a lot of our customers want to be talked to on the phone on the bigger scale, there's a huge size of smaller customers out there that want the digital experience, money in the bank very quick. And that's really like the broad market in terms of certain size customers, and then how their needs can fit based on their industries, right? So a lot of truckers want to borrow for like short term, 90 days. There are medical professionals that would prefer to borrow for 3 to 7 years. And so we need to continue to segment our customer base and fit the right products. The digital one, though, is massive because that will service a lot of different niches. And so we're spending quite a bit of energy there.
So more precision in the products.
Yeah, precision and detail and convenience, accessibility. There's a lot of seasonality that we're building into our models, where how do you give more lift before a season? How do we talked about prediction markets, but you can you can use a lot of predictive elements to know if something's going to be a better season or not for certain areas.
Sure.
And
Yeah.
then we do see volatility in our portfolio and performance based on strong winters or certain areas. And so you can retarget a lot quicker through knowledge. Like Houston, when oil prices are low, the whole community gets crushed. But they don't.
Hmm.
No, that's restaurants, plumbers, everybody. There's a lack of money, and oil prices are high. That city does well. So it's there's a lot of regional data. It's becoming more and more easy to access.
Just okay. So using that computing power and data access to
Well,
to
then
target
if
better
you're if
to serve the customer better.
Yeah.
well, if you know they got hurt because they're in a 2 mile radius of a fire, we can actually reach out to help you and talk to you versus you calling in to help us. So
What
there's
if they started the fire?
that would not be good. No.
I guess
I think that
that's
will
not
be
in your world.
interesting, the Trump accounts
Yeah.
and the funding, and you went
Oh
to the
yeah.
prediction markets. And like, I do think as an employer, it's great, if I could help support the generation below. I'm not sure how that gets mainstream and all that. So there's a lot of different things that are going on. And that one I kind of like,
Yeah.
because in
Huh, huh.
finance, it's hard to teach time value of money.
Yep. Exactly.
Yeah. Well, you can send them a picture of me and say, "Don't end up like this guy." We might have to do a podcast or something. Uh,
Don't be like John.
you mentioned interest rate, and I'm from the finance, treasury, banking part of the world. How does interest rates and I guess it looks like more unpredictability these days affecting you guys? Is it you just all balance out? Well, it must affect
I
business
think
somewhat.
the rates affect a lot of the housing market, new construction. So it does have different ripple effects, because we finance a lot of construction related projects. And but at the end of the day, there's all these other dials of lack of housing that's going on. And so, depending on um, people's mobility in their business, a lot of them will switch their trades and depending on their community, they can. We're in San Diego. They had a big LA fire. The amount
Oh,
of work in LA is endless. The
hmm.
So people have kind of maneuvered because that's kind of what small businesses. That's the backbone of the country. That's kind of what they do. I think the ones that get the hardest that we don't finance as much is the retail related space.
Hmm.
Are people as people prefer Amazon, over going to the store. And you're seeing some of that kind of reverse right now, but customer usually wins is what we've seen historically.
Is there anything that you would want SMB lenders to know, or that are common misconceptions that you're like, I wish they would know this, or you advise to them?
Like peers, I think focusing on the health of the customer, making sure that you're supporting them versus your own economics. I think sometimes people are solving their own issues versus the customers, and
Hmm.
it's a period of volatility where people use the word AI kind of all over the place, but there's a lot of opportunity to gain knowledge. And that's what I try to teach my own college kids is ask the right questions and then you'll keep learning. And if you keep learning enough, you'll move to the next side of this change. And um, I think it usually takes certain tasks to make you feel better, that you achieve success. And I always kind of tell people short-term gains and to measure them so people don't get lost in the long game when you're trying to do short-term stints.
Huh.
The
Yeah.
paranoia, I think it was Bezos that said a lot of bright people are scaring people. And I think he brought up a radiologist, and he's like, the radiologist will say, hey, and I don't know if there's going to be enough need for radiologists going forward. There's lawyers that are saying, hey, I don't really need the first year interns. So you got bright people all over the place that are older that are giving advice that are scaring the next generation. when that advice doesn't, that might affect them more than the truth, right? Because if you can do a lot more than ever with less. And I think the biggest thing was always wages when you start a company, can, benefits and wages. And now you can do all that with less. And so there'll be more businesses than ever started.
There's plenty of
Like
opportunities.
we talked about that with gambling, lending's historical. There's always been borrowing. In order to grow, you got to borrow. Uh, I think I'm a very American Dream pro guy that in America, you're allowed to borrow. In other countries, it's really hard to. Ability to get access to capital gives you the shot, right, to hit whatever your dream is. I think that's like a cool part of what we do. You don't know all the impact. You just know that when you meet owners and stuff, you get to hear their stories, and they employ people, and so you're financing people that employ people, which is part of the whole food chain of America.
You mentioned you don't emphasize retail so much in your lending. What are some of the ideal kind of customers these days? What's the sweet spot?
We're all over the map. A lot tied to housing, construction, restoration, trades. We do medical. We have business services. There are a lot of lenders in retail, that are captive, that can PayPal, Amazon. You can get loans directly, from some of the people you borrow. DoorDash will give loans, so you're fighting.
Wow.
Sometimes you're finding these little captive audiences where like, is that where you want to spend your time, or if you or do you partner with them in a different way, because their data is so enriched. And so you have a lot of people in retail that at POS system providers can offer capital. Their goal also is to serve customers, right? So they do it a little bit differently, and we can help finance alongside them if a customer's trying to grow in a meaningful way, like opening up a whole nother location. Then, hey, I need to borrow a little bit of money for time. It's a different distribution side.
So you've been at this for a little while, and you've grown to a bit of a size. Is there anything? Are you at the size that you want to be at where you're at now, or is there anything that would help you grow to the next level? More capital or
Yeah,
something?
we have plenty of capital. I think I consider us small. I think, the bigger you are, the harder you fall. We're only 300 people. We have a lot of opportunity, not just in bodies, but in scale. Um, Although we've been in business 27 years, the market's, I think, going to continue to grow, fundamentally. And, um, it's kind of my fundamental outlook is, what's the best way to, like we talked about, if ChatGPT becomes a big distribution of information, we need to move where the customers are trying to find you. Uh, but there'll be plenty of customers.
Yeah, you don't hear
Lending
people say
doesn't
that
go
all the
away.
time.
Just like, you know, it's not like the insurance market's going away. Waymo still needs insurance, but
Yeah.
a lot of things are changing, and they become, some areas could become very less profitable. Some areas could be more profitable.
Yeah, keep moving with the market. Thanks so much for joining us. Some really good insights. Thanks for helping the economy with that funding.
All right. Well, thank you guys for your time.
Yeah, well, thank you. That's Dave Gilbert, the CEO and founder of FairSquare. Keep up the good work. Please hit subscribe, and we'll see you next week.